Hello guys, welcome back to this video. This is the Wednesday. If you've checked my previous two videos of breakdown, I broke down the trades we took on Monday, on Tuesday, and now this is Wednesday. Wednesday we were looking more into GBP USD than Euro USD. The reasons I gave in the Telegram group. The Telegram group link is on the description. Just check it and then we go. So the requirement for trading this strategy, here is it. It is for free. I still don't have mentorship thing. I'm just documenting my life there as a proof of concept. And then I also record these videos so that I can remember with them in future where it all started. So we can see that the market in GBP USD broke structure here to the above, came back, pulled back into the demand zone, and then again changed the character here. This was a change of character. You may ask why, and that is why I clearly said that you need to know some things, and that is basic market structure is here. So in this list, what you also need to know is valid pullbacks, not just pullback, valid pullbacks. That one will help you a lot. Because let me just explain what happened here. What happens here is that the market pushed down, then it pulled back. Why? Because this pullback never broke this low, and therefore if you go to lower time frame like 4 hours, you'll find out this was a break of structure, this was a pullback, and this was a break of structure. So when the market again comes back, it doesn't need to violate this level. If it violates this level, it means the market is back to being bullish again, and that is why you see we got a pullback, and then this was a continuation of buys. So the market was buying all along, and the strategy really played well, because it's just a matter of marking highs. You buy the next day, marking highs and low, you buy the next day, high and low, you buy, high and low, you buy. It bought here, you mark high and low. Excuse, to mark high and low, both mark high and low, fail to buy, it's normal. Then the next day you mark this high and this low, knowing that this will be a pullback, you buy. And then we have from this point, this is the low that caused this break or structure, and this is the candle. So you trace its low, this is the origin that broke structure, and for that reason when this candle wicked it out, it was already confirmation that we had a change of character, and therefore the second day you are expecting sales. You can see it sold, and whenever we have two consecutive days selling like this in the opposite direction, unless it's a pullback, then the third day is always automatic sales. So the third day you can see we got a pullback, we sold, a small pullback, sold, came back, we got some small change of character somewhere here, but the overall change of character is happier. So if this change of character was to sustain, then we needed to have the third day close bullish to take this high, but it didn't take out, it closed lower, and therefore Monday, which I had already documented how we took one of these trades, but we took it on Euro USD. I always prefer Euro USD, as I've listed here. This is the order of preferences that I like to trade this pair. I like USD, Euro USD, AUD, GU, NZD, USD JPY, Euro JPY, and then the list is USD CHF. I also have trade breakdown of this. Just check in the video section. The trading concept is the same, the checklist is the same. Very simple. You just mark, like in this case the market is going, like I said, the third day is always sell. Like in this case you can see if you mark this low and this low, it gave you some small sell, but then it closed bullish, meaning that it really pulled back heavily. So the next day, this is just a pullback, the next day we are expecting a drop, this thing to be taken. So what happens in the next day, my internet just messed me up a little bit, but I'm hoping it's going to come back just some short minutes from now, and then we should be seeing it coming back, and then we continue. So like I'm saying here, after this pullback, it's always a good, immediately you see pullbacks, you should be expecting that the market goes that the market goes to take the low, because this is just an ordinary pullback, and therefore we are expecting this buy is not any change of character in lower time frame. It's just a pullback so that we can continue selling this market. So like I said, what you need to know from this strategy is that you need to understand 4 hours fractal highs and low. You must be able to categorically understand 4 hours fractal highs and low. You must be able to understand order flow very well. You must be able to understand order flow very well, both in 4 hours and also in 15 minutes. That would really help you even in 1 day, provided you understand order flow. That should be enough. My internet is back. So after order flow, you need to understand basic market structure, what I've just explained here. You need to understand where IDMs are inducements. Then you need to understand basic supply and demand. This is the easiest. And then you need to understand single candle order block. This is where we get our entry. Then you also need to understand valid pullbacks. So with this, what do? We mark our external range in 1 day time frame. So this is our high, this is our low. We are expecting sales. We are expecting this low to be taken, and then we now go to internal, 4 hours internal. We are expecting 4 hours internal. So this is our daily time frame. This is our change of character. That is what I've marked here. This is our breakout structure on a daily time frame. So what happened here? Market came back in 4 hours, pushed, took this IDM, caused another breakout structure down here. So what is the market doing? As you can see, what market did was it pushed down, pushed upward, pushed down, took this IDM. Why was this IDM? Because immediately it caused a change of structure. It didn't sustain. If it sustained, then this would have been, if this sustained, then this would be now a change of character. No, sorry, this would be IDM. So if this sustained without this one being taken out, so this would be liquidity, this would be a change of character. But since now we are doing the opposite, we know that the market is supposed to be selling, so we expect that this was a pullback, was a push, pullback, push, pullback that took liquidity here, and then it caused a breakout structure, and now the market is back to pulling back. What do you expect next? We expect a down break. So if we check this, ideally, what is our fractal high? This is our fractal high, and this is our fractal high in 4 hours. So we are trading with this small range. We know that we are expecting the prices to come and take this low. Simple. So let's mark our highs. So this would be our high here, and then this would be our low. So if this low is taken, we are selling. If this high is taken, we are buying, because this is the last high that broke structure here in the 4 hours. But since we don't want to complicate life, that is why you see we are using very small marking. I really don't like complicating my life in analysis, so that I can have analysis paralysis. That is why you see I prefer to minimize it. So ideally, this is our daily high. This is our daily high. That is what I needed to mark. And then this is our daily low that we are expecting to be taken out. Daily low to be taken out, and then this is our 4 hours fractal low that should be taken out so that we can keep selling. But we know that especially if the market pulls back heavily like this, by the time it is reaching here, the session will be over and we are day traders. That means if it takes this, it will be pulling back for the next day to blow down. So we would be keen to monitor it from above, so that immediately start pulling back from above, we are in. Like in this case, this day the market pushed down, pushed back, and you can see immediately this market took this low here. This was a good trading opportunity. So that was it. Same to here, market pushed back, pulled back. So this was our fractal low and this was our fractal high. So immediately the market took the low of this, we knew that we are back to selling. So that is what we are going to do in this case too. So this is our 4 hours fractal, our 4 hours fractal high. Provided this one is not taken, we know that we are in pullback phase. Provided this one is not taken, we know that we're just in pullback phase, and it's just a matter of time before we shoot it down, before we can shoot it down. So what happens in this case, we would like to see, this is my time as not, this is at night, we get this push down. Sorry, I marked this early. We need to have this ones, these two candles included. So as you can see, what happens here is that the market pulled very close. So this becomes our internal fractal low, because it is this push down, then market started pulling back from this range. The market pulled back. You can see this was a pullback because it never took the high of this, low of this. So this doji one, or IFC, institutional funded candles, that broke this. So ideally this is our fractal high. So in most occasions we would prefer to see this being broken before we can sell, otherwise we will be liquidated. So this is our 4 hours fractal low. I needed to get those candles before I mark. Sorry, I got carried ahead of myself. So this was our low. So I would prefer to sell only when I see this low being taken. That is when I know the market has aligned with the daily. Otherwise, this 4 hours is still on deep pullback. So what happens on 8 AM candle? You can see it even took the low of the high of this. This was a confirmatory change of character, and therefore the best thing was to avoid this market. But since we are traders and we are day traders, we can still be looking to sell, and just conclude that this was a liquidity sweep, because there is no even closure. As much as I know that this could be just continuation, this could be a liquidity closure, liquidity sweep. So what I need to do is, if provided this one is taken, if it doesn't take this, I'm not interested. So shift to 15 minutes. So the probability of this trade is becoming very flimsy and very low, but we can see the market has started pulling back. So this must be taken. I wish to also see this one being taken out. So what you need to also know is that the probability of this trade is becoming lower and lower because of those breakdowns we are having there. So you only took it at your own risk, or you just leave it. I will tell you what happened in the end. So immediately we see that that inducement being taken, tap onto the above supply zone, and then we see a push down causing that break. So if you check on 4 hours, you will realize that this 4 hours low has been taken. It means now the market is back to selling, so you can sell you can sell above here. So what happened here, this was just a liquidity sweep. We always need to have a liquidity sweep, and as you can see, this was our first change of character. Actually it happened here, but we can just, for clarity purposes, we can have this as the first breakdown of 15 minutes down. Then this was second 15 minutes down. What does that tell you? The market is aligning in 15 minutes to go down. That was 15 minutes down. So this was just the third one, and this third one has got more interest because it even took liquidity. What I always say is monitor the order flow in 15 minutes time frame and IDM zones. So that is why I mark this as possible IDM. I would wish to see this one being taken before the market shift here. So immediately it was taken, I was able to spot that we have a supply zone over here. So we need to sell from this point. So the alternative option is to go to 15 minutes, is to go to 5 minutes, because that is the only remaining thing now. Go to 5 minutes. I'm not feeling well, so bear with me. So this is low risk, but everything is playing out. So monitor market takes 4 hours fractal low or high that aligns to 1 day time frame. You can see it took it here. Here is where it probably kissed the low of the 4 hours that took this liquidity. So what happens, we now wait for we monitor order flow in 15 minutes. We can monitor and see that at least we've had a second break here, only that this second break was valid, but now the problem with it is that it never took liquidity anywhere on this leg. Maybe if it took this structural liquidity at the same time, this second break, we needed to have it break here for it to confirm second. So it broke here, but the problem is it never took liquidity. That is why it was easily liquidated over there. Then what next? We mark supply IDM zones already taken. So after IDM was taken, if this was to remain IDM, it means this was to be taken. But if this one pushed down somewhere here, then pushed a break, caused a break of structure up here, it means 4 hours fractal low would have not been taken, and therefore this would just be a break of structure, and then this would be an IDM. So get that clearly. So let's see. There's no scope yet. There's no scope yet. There is no scope, and there we go. So this becomes your scope. This becomes your scope. All of that region, that becomes your scope. So you can look to enter from pull back into that, or you can just take it from any reaction above. You can put your stop loss here, but you risk getting liquidated, and that would be 4 pip stop loss. So the most ideal one is to put it here. 7.5 stop loss is not bad, is not bad at all. So that would be nice, or just 7 pip stop loss would be nice. This is a trade that was shown in my, everything that I'm showing you here was shown in my Telegram group. You target at least this low should be taken. This low should be taken because that is our 4 hours low. This is our 4 hours low, and if you are so determined, you can hold it to this point, and that would be a 1 to 5 low. But since 1 to 3 low can give us here, we are happy to take that 1.5. Now I want you to note one thing. This day was a CPI day, and therefore I only shared this, but I never took it, but I shared everything that I'm showing you here stepwise for people who just want to trade, because not everybody shares the same sentiment. But I broke down the way I'm breaking it down right now. I broke it down here in my Telegram group. What did I say? Today is CPI. I prefer to keep it low today and avoid being aggressive. And then I said, please avoid buying GBP USD. Your SL will be very bloody. All pairs that end with the USD should be selling. So just stay on the lookout and do nothing more than doing anything. Then and this was now the trade. So like I've showed here, this was the breakdown. So we said we can now sell from this point. So GBP USD sells playing out well. Now the problem is news. So we let it flow. We let it flow and see what happened. So it pulled back, tagged us in, and then boom, news came, and as seen, blew all the way to 1 to 5. The scope was even reflected. If your direction is okay and you are not wrong, in most occasions you will see actually I remember I took this trade in one of my pro firm that I don't like them at all, and therefore I was willing to risk it, but at the same time they did me dirty. The scope was respected, so if you took it from the scope just above with 6 pips stop loss, you made nice, or you made 10. The scope was respected clearly, and as you can see it played out. So I took it there, but the prop firm never did me well. I shared it in another group that I'm also part of it. So that is how the trade played out. I'm going to share Thursday trades. So this was Wednesday. I'm also having USD JPY trades that played on Tuesday, so I'm also going to share that. If you are watching this video past one day, just know that it has already been shared, so just be watchful.